Welcome to the Vancouver Resource Investment Conference 2024. I'm Gilbert, and I am here with Nick Hodge, our guest speakers is one of our conferences last year. How are you doing, Nick?
I'm doing great, Gilbert. It's wonderful to be here with you. How are you?
Great, wonderful to speak with you in person. Finally,
That's
with
right.
all these virtual calls. So we're going to start off because everybody in the beginning of years a bit worried on the uncertainty on the market still from last year. People worry about we potentially have a global recessions here this year. What's your thoughts on and the interest rate we seem to be at the peak? So what's your thoughts on the sort of macro market shaping out this year?
Sure. I'm going to start with the U.S. and then maybe go a little bit more globally. So I think the U.S. is headed for a new slowdown. You had sort of 2% economic growth in the U.S. last year in Q1 and Q2. And then Q3, the growth sort of expanded. The last number that came out was 5.2% GDP in Q3 for the U.S. That's going to start to slow here soon. The Q4 GDP number is going to come out soon, probably by the time this video is out, January 25th. And that's going to show low growth, like 1 to 2% growth in the United States. So a slowing of growth again in the United States. That's one thing. I think the consumer is in a bit of a tough spot with expanding credit card balances and being late on their payments. Those rates are going up. So I think we're in a sort of a short-term window where there's going to be headwinds for the U.S. economy. There's already headwinds in the global economy. I mean, Germany's already in an industrial recession. If you look at their PPI numbers, their manufacturing numbers, Europe is in a recession. China hasn't been so good either. I thought in 2023 they were going to have a strong reopening, and I started to buy Chinese stocks, but it only lasted for a couple of months. I think, March, April, May-ish, and then it started to slow down again. So now even the Shanghai Composite Index is at like a 3-year low. So I do see a global slowdown, but I don't see a crash. So then you talk about Fed rates, right? The Fed was talking about cutting in December. I don't think that materializes until the second half of 2024 because I think the growth is going to be slow, sort of stagflating, but it's not going to be crashy. And if we do get some sort of economic or stock crash and the Fed cuts rates, then that's going to be the catalyst for cuts. It's going to be much worse than anybody thought. So anyway, I see a slowdown for the next 2 quarters, and I use that time to buy things like copper and base metals because those prices are going to go back up once the economic expansion returns in late 2024.
So you good take for the overall macro markets. Let's talk a bit about some sort of metals. So gold has done really well last year due to numerous activities and black swan events happening. So let's just talk about more on silver. Not really a lot of people actually talk about it because gold has done so well. What's your thoughts on silver?
I would like to talk more about gold as well, I think, but I'll frame it in terms of silver. So silver gets a lot of excitement, right? Because it's priced lower, so the percentage moves can be bigger. And it also has a much larger following of retail investors like silver bugs who are always looking for some sort of cataclysmic event or end of the world. And so you remember a couple of years ago, we had this Wall Street silver phenomenon and silver was going to go to the moon. And I was telling people for a long time, I don't see that happening. I don't see silver going to the moon because of the slow economic growth that I was just describing. And so I think silver is more an industrial metal. I don't lump it in with the precious metals like PGM and gold. And so I think it faces that similar slowdown that's giving copper headwinds for the next 6 months. And the other thing is renewable energy, right? When I look at these silver bugs and people who want silver to go up, they point to something that's going to make it go up. And the newest thing has been solar panels. We need all the silver for the solar panels, but even the solar installations, have been sort of slow recently. And I've seen some in Europe that have even been decommissioned like early in their life cycles. And so I'm not sure that, solar is going to be a major catalyst for silver. All that said, I think that when gold does break out to 2,100, which is going to happen in 2024 or 2025, then I do think you get a violent rally in silver. And as we know, it's going to go up higher in percentage terms than gold goes up. So for the time being, I'm more bullish on gold, more bullish on the precious metals. And I think silver will have its time in conjunction with the base metals.
Let's just turn our attention to the base metal. You mentioned about your buying on the dip.
Yep.
Let's talk about copper.
Sure.
Because copper didn't turn out to be as good as people thought because all these demand have been slowed in 2023. So what's your thoughts on the copper? Because we see a big major event happening with First Quantum. that valuation got killed with that mine. So does that affect on the sentiment of investing into the copper stocks?
Yeah, so I think long term, copper's got some of the most robust, bullish fundamentals, supply and demand. You just mentioned First Quantum. There's a lot of older copper mines, porphyry mines that are being depleted, and we have to find new ones. This is not a new story. Everyone knows this sort of long term copper story. What's happened, and what I said was going to happen in 2023, is that, and I probably said this at your conference, is copper is going to get comfortable closer to $3.50 than $4 because of the headwinds of economic growth that I see. And so I understand about the supply shortfalls and the mines coming offline, and that's going to have a real effect. And so if I could take a longer time frame perhaps and look at 2 to 5 years as opposed to 6 to 18 months, in 2 to 5 years, I think you have $5 to $7 copper. But I think you have time to build positions ahead of that. And that's what I've been saying. And the market's been saying this as well. So if you look at a chart of, the big copper producers, Rio Tinto, Freeport McMoran, Southern Copper, for example, they've really been pulling back here in late 2023 and 2024. And I'll use the middle of 2024 to build positions in copper because there's going to be a robust 2 to 5 year bull market in copper after we get past the economic slowdown.
Sure. Besides copper, we also talk about uranium. Last time we talked on the conference, and had a bit of a surprise, meaning how drastic, how fast the price went up in the later part of the year. So does it surprise you any means in how the uranium goes?
I'm not too surprised. No, it's following similar trajectory as 2007. So uranium quickly doubled from $50 a pound to over $100 a pound in the last sort of 6 months of 2023. It probably does have to digest those gains. So while I'm not surprised, it can't keep going straight up. It does have to digest, and the chart has to sort of consolidate a little bit. So I wouldn't be surprised to see that in sort of the $100 to $110 a pound range. What I would say is that the equities were doing a good job of keeping pace. So when this new uranium bull market started in 2020, 2021, the ETFs and the stocks, they were going up the same as the uranium price. And in the second half of 2023, we sort of saw that break where the uranium stocks stopped going up as fast as the price. And so I think that gap has to be made up. Either the price has to level out a bit or the uranium stocks have to keep going up. And the truth, as I always say, is probably somewhere in the middle. So I think there's still more time for uranium equities to go up. I think we're still early in the cycle. I think that utilities still have a lot to contract for. And the thing now is that you have to manage your positions. Before we were waiting for a bull market, right? We were waiting for Japan. We were waiting. Now we're inside a uranium bull market. And so you have to do more trading. You have to sell rips and buy dips. You have to evaluate new companies. Like I was walking around the exhibit hall and I think there's 3 or 4 uranium companies that are brand new. So you have to do diligence in that way. But uranium for me, from the supply and demand fundamentals, and especially because of the ongoing decarbonization and countries realizing that they can't meet their targets with solar and wind, et cetera, that there's still a long way to go in the uranium bull.
So Nick, the last question I have for you is, in the beginning of the year right now, you have done analysis of all kinds of different markets. Which metal out of all that you really want the investors should pay attention this year? Because there's a lot, we talk about gold, silver, copper, uranium, and other sorts of PGMs that you may like. But which metal is your favorite? Do you think that it will perform quite well this year?
Yeah, so I think I'll pick gold. I think uranium will do well, but I think gold has a lot going in its favor. It has coming rate cuts that we know are going to materialize in 2024. It has geopolitical uncertainty across the globe. I don't have to point out all the different wars and things like that. You have monetary policy and taxation policy that's going to shift in the U.S. back to like an easing stance, which is good for gold. And then I think even heading later into the 2020s, we're going to get into a real sort of tax fight in the U.S. where they're going to talk about raising taxes to fund their entitlements, Social Security and Medicare, for example. And one of the ways for wealthy individuals, this is a little bit further out in 2020, to circumvent some of wealth and inheritance taxes is to put some of that wealth and capital into gold. And I've talked to a couple of high net worth individuals already who have been interested in circumventing some of these coming taxation things they see in the next 5 years by owning gold. So anyway, all that to say, gold has a lot of catalysts lined up. It looks very good technically. It closed out a year above 2,000 for the first time. And so fundamentally and technically, I think gold is one to watch, and also the equities have a lot of catching up to do. So, both from a metal perspective and from a stock perspective, I think gold is exciting.
Thank you for sharing your insight with us, Nick. So all eyes on gold this year. Thank
For
you,
me.
Nick.
Thank you.
Thank you.